The markets are still showing their direction based upon the big candlestick reversal patterns that we witnessed in the indexes last week, such as the big bullish engulfing signal in the Dow, and then the trading back up above the T line, and also allowing us to identify the longer term pattern, which could be a J-hook pattern, especially if they eventually break out through this level, meaning this wave right here could be the same magnitude as this wave right here. The same analysis can be applied to the NASDAQ, which also had a gap up through the T-line doing kind of a J-hook pattern, and right now still trading up above the T-line as well as the 3T line. When they use, or the market uses the 3T line as a support, that's showing a lot stronger investor sentiment that there isn't any doubt at this point that the bulls are definitely in control. Being able to identify which commodities, such as crude oil, trading positive allows the candlestick investor to anticipate that crude oil stocks are probably going to do well because crude oil is doing well, because the market is doing well, which basically says you're putting all the stars in alignment that you're probably in the right industry at the right time in the right market direction. And expecting breakouts, as we can see in Bass, one of the oil stocks, has a flat handle. Look at your long-legged doji, bullish confirmation. Now you're sitting right back up here at the 50, which is right equivalent with the handle. If it breaks out through here, the expectation based upon a scoop pattern would be that there would be a slingshot effect, which would mean this stock could move much greater percentage than merely an uptrending stock during an uptrending market. And recognizing fry pan bottom breakouts, as in the weed stock of ACB. When it broke out, what do we expect? A lot of exuberance coming out of this type of pattern. Also, allowing for excessive profitability during an uptrending market. The visuals of candlestick analysis allow for easy identification of who's taking control, the bulls or the bears, and where they're doing it. You can see the big left-right combo in Micron right here at the 50. Didn't get up through the T-line, but once again, did a bullish signal confirming an inverted hammer signal, trading positive above the T-line. Now we know what our next signal or pattern to recognize. A positive open would make the doji rule kick in, which means it's probably going to trade positive, and the magnitude of the move is usually going to be the same as the magnitude of the move before the T-line, making this a doji sandwich, confirming a J-hook pattern that tells us our first likely target is back up to the 200, and then the possibility that wave 1 and wave 3 will be the same. Analyzing price moves based upon historic reactions from human nature just improves the probabilities of not only being in the right direction at the right time, but in moves that are significant that are going to produce inordinate profits versus merely an uptrending stock during an uptrending market. Using the knowledge of candlestick signals, such as a bullish harami telling us the selling has stopped in the oversold condition, right on the 50-day moving average, followed by bullish confirmation, also provides a good indication that our next move to the upside is in progress, especially if it comes up through the T-line. And we can kind of judge what the magnitude of the move will be. That our first target is probably testing the recent highs or giving you about a 30% upside potential. Analyzing the candlestick signals and patterns is a very simple process for identifying where and when a reversal is occurring and expecting a much stronger move than merely just a slow uptrending move of the markets. That'll be it. We'll see you in the chat rooms.